My friends, hope you're doing well. I just made the ultimate blunder. I was sitting here recording my AMC video and realized that I forgot to push the record button when I was almost done with my video. So, prayers up for me. All right, we're going to do this again real quick. If you're new to my channel, please know and understand I'm not a financial advisor. Everything I do is for entertainment and educational purposes only. I'm just trying to help spread actual factual knowledge about TA options, charts, all that good stuff. But at the end of the day, you need to make the best decision that you possibly can for you and your family and your portfolio, because you are going to be the only one that is stuck with it at the end of the day. So don't just listen to me. Don't just listen to another popular channel or person on Twitter or anything along those lines. Do your own research. You have tons of ability to do research at your fingertips. I highly recommend that you do that. This is going to be my weekly outlook video for AMC stock. Things could get interesting here relatively quickly. I kind of want to walk everybody through what I'm seeing on the chart. First thing that I want to talk about is, if you haven't already, please follow me on Twitter, Colin_Gladman. Easiest way to keep up with everything that I'm going to be doing, talking about what I see, intraday price action, all that good stuff. I pretty much make my videos for YouTube and post them. But if you really want to interact with me, ask me questions, Twitter is going to be the best place to do that. So please follow me there. First thing let's pull up is going to be the option chain. So I have been very vocal on Twitter here recently about this, and I didn't even know it was a real thing here till recently, but this, we're not going to buy options for AMC or anything along those lines, because the only reason we haven't MOAS'd is because Ken Griffin and Citadel were using the option chain. What? Like, come on, guys. Seriously? I'm not saying that manipulation doesn't take place in the option chain. It absolutely does. But to act like the option chain is keeping you from MOASing and having $1 million a share AMC stock because all you did was buy and hold and now there's no longer poverty on the planet is just laughable. Okay? My channel is going to be based on reality. It's going to be based off of what I feel I can prove can happen on the chart. I hope you are not one of those people who legitimately thinks that AMC is going to, saying things like $500,000 is the floor or anything along those lines, because you are going to get burnt. You're going to be bag holding, and I do not want you to do that. I want you to be an awesome, profitable trader and investor, and so please don't listen to stuff like that. At the end of the day, all I can do is, give out my message. You are free to believe whatever you want to believe. But this, nope, the price is going to hit what I want it to until I hit the sell button, is just crazy. That is not going to happen, okay? The price is going to be whatever someone is willing to buy your shares for. And if it hits $1,000 a share and everybody starts selling, you're not going to see $500,000 a share. It's just reality. Now, I'm not saying everybody's going to do that. At the end of the day, I'm actually going to walk through, some price targets that I think we could see for AMC, when we start going to the upside. But I have always preached kind of Tesla style squeezes. And what I mean by when I say Tesla style squeezes, a lot of people look at Tesla and they're like, well, it's not really been a squeeze. And when you've got someone like Elon, a guy like Elon can create perma bulls and perma bears. So I have a bunch of Tesla in my other accounts, and without a doubt, what I follow on, call it Tesla Twitter, if you will, you've got a ton of people who are just always talking crap about Tesla and how it's awful and the most overvalued company and Elon's going to be a failure and everything along those lines. And then you have people who all they do is buy Tesla and they won't even consider purchasing anything else. And so when you have a constant struggle between those perma bulls and those perma bears, eventually it's just who's going to be in charge, okay? And when the perma bulls are in charge, Tesla's going to be tanking. And when the perma bears, when the perma bears are in charge, that's when Tesla really gets pushed down. And then when the perma bulls, get in charge, that's when you see it. And it's essentially called a rolling gamma squeeze. And it's going to be done a lot through the option chain and everything along those lines. So if you are someone who is just like listen, man, I don't dig options. What's best for me is just buying and holding. And that's what I'm going to do is when I can, I'm going to buy some shares and I'm going to hold some shares. And that's all I'm going to do. I'm not going to play options. Well, then, my friend, you and I, we can be on the same team. If you are someone who is options are the devil and you're a shill and Ken Griffin's taking your money and all this other kind of stuff, then you and I, my friend, we are not going to be on the same team. Okay? The options chain and how options work, whether it's buying options or selling options, is a very valuable tool, not just to me, but to anybody who is a wise and intelligent investor. And that's who I'm trying to speak to when it comes to my channel. Now, just because I don't have a problem with options doesn't mean there aren't stupid options to buy. If you roll out of bed tomorrow morning and you're one of these people, right down here at the $50 strike price, there's 25,000 contracts. At the $60 strike price, there's 27,000 contracts. If you roll out of bed and YOLO your entire portfolio into those contracts, then yes, in that situation, I would agree with you. Options are a bad thing for you. If you are a wise investor and you bought some in the money, at the money, calls or anything along those lines, I would consider you a very wise investor if that's something that you want to do, especially if you went out, 30 days or so. But yes, I agree that the argument that buying way out of the money weeklies is burning money. And I do agree with that, but they're also very cheap, okay? I would look at buying these as like lottery tickets, all right? The reality is if we go look at the chart here, AMC has had two massive run-ups. One in January of 21, one in June of 21. So, if you bought these type of contracts those particular weeks, you made an insane amount of money. But it's like buying a lottery ticket. If it works out, yeah, of course it was a great idea. If it works out. If it doesn't work out, well, then you lost money. Same thing with the option contract, okay? Now, when AMC does start running, what's going to help it the most is the in the money and the out of the money. And if the volume's looking good, slightly out of the money calls. So as what causes those gamma ramps is as the price goes up, the market makers have to go out and hedge for the shares. They have to own those shares for all the contracts that start becoming in the money. Okay? So they have to go, oh, dang, let's just call it the 14. So right now there's 5,580 contracts. AMC starts running to 14. Market makers have to go, oh, dang, we got to make sure that we have the shares for these 14 contracts. So then they have to go out and they have to buy the shares. And then when you have the volume coming in, it's essentially all of a sudden you're getting retail and probably some FOMO. And then you have the market makers that have to go out there and buy a bunch of shares. And that's what starts dramatically pushing the price up. So anytime you see massive runs in AMC, the option chain has a lot to do with it. So once again, don't be talking, junk about options if you do not understand them. That's just unwise. Really understand what's going on before you, form an opinion, and definitely before you go out there and blast it all over the internet. I mean, it's just, I see the wildest, and I mean wildest comments on Twitter when it comes to that kind of stuff. It's just not true. Okay. And I really try to stay clear of stuff like that. Like I really just try to stay in my lane, but this is one hill that I'm ready to die on, is people saying options are awful. Options are a tool. Like I said, if I give you a hammer, you can take that hammer and you can put a nail on the wall and you can hang a pretty picture up on it. Okay? And if I give you a hammer and you walk over there and you smack your best friend in the face with it, that's misusing the tool. It's not the hammer's fault. It's the person using the tool. The options and the options chain is the tool. You have to be a wise investor to use it properly, not going around swinging, hitting people in the faces with it, especially your own face, because that's what you're doing. You're taking a hammer to your face if you come out here and you buy a bunch of crazy ones. Now, if you load them up on Monday morning and AMC squeezes this week, do you look like a genius? Yep. But what's the chances of that happening? We all know it's very small. So I'm all for options. buying, buying puts, buying calls, selling puts, selling calls. I am all for options so long as you do them wisely. Highly recommend. Learn as much as you possibly can. If you don't know what a strike price is, you don't know about expiration dates, you don't know about the Greeks, if you don't know about what is made up of options, then you need to learn more and you need a paper trade. Now, let's jump into the chart. So, what we've got going on right here is a nice reaction to coming down here and hitting in this, $9.50, $9.70 range. Okay. A bunch of people have been asking me about, whoops, I'm on the 4 hour. I'm going to go out to the daily here real quick, my friends. A bunch of people have been asking me about, what about my wave 1, 2, 3, and 4? And the reality is which is what I said, is if we come down here and we make a new lower low, then that Elliott wave theory would be off the table. Okay. And then somebody asked me, okay, well, what does that do towards your next projections as far as what your highs could possibly be? And so that's what we need to go in and look at here next. First off, I want to start with the fib retracement. So going down here from the buy button collapse up here to the top. Whoops. So this is the fib that we've been watching for a while here, mainly because you can see every key area of this fib has had multiple reaction points of support and resistance. Okay. Most notably our two big push-ups here out of the golden pocket that failed. We came down here, almost touched the 786, but haven't quite touched it yet. Now, we do have a gap. All right, I think it was $11.20 gap. So that's a possibility that might need to get filled. Let's see here, we closed. Yeah, $11.20, and then on Friday our low was $11.49. So we still got a 29-cent gap that we have left from over here from Thursday of last week. Okay. In reality, would I like to see that thing filled before we, head up out of this area? Yes. I was telling somebody on Twitter the other day that I feel like gaps are kind of left as like return points. So it's like we might shoot up and, go high, but then it's like eventually, it's like a parking spot for the computer, if you will, that eventually it's going to wrap back around again and park in. And I'll kind of show you why here in just a second. So that's going to be what I'm looking for as far as, in a perfect world, I would like to see us go ahead and come down here, fill the gap, and then we head out of here. But there's also another key thing that is not necessarily a bad thing if that doesn't happen. And like I said, I know I keep saying we'll get there, and I promise we'll get there. So this is going to be the main fib that I'm going to be watching. If we go down all the way right here, then we came down here, got below the 0.5, came back up through it. Let's see what that reaction looks like on the 0.5. So as of right now, the 0.5 from the macro all-time low is holding up nicely right now. But when we're talking about, from a cycle standpoint, I was really hoping that this low right here, this area would be respected. Okay. And Amy does like to hit, those 786s. So $9.28 is on the table. It's also on the table because of the VPVR. Once again, this shows, where the majority of the trading has taken place. And wouldn't you know it, right over in here, let me get lined up here correctly. So when you get over in here, look at this. So pretty much this is where retail really started getting involved in the stock for AMC. And what the VPVR does is it takes, your candles over here to your last candle over here, and then you got what's called the point of control. And the point of control is going to be, where is the most volume? Where has that been traded at? And let me actually, I'm going to add more rows. So you can just go over there, click your settings, and you can see that basically right in here, pretty much right where we're at. And look at that. Look at the bounce right there. So you guys that follow me for a while know that these are the moments that I'm just people who tell you that you can't use technical analysis on a manipulated stock like AMC. Number one, I think all stocks are manipulated. Yes, more than others on some. However, TA still works wonders on these stocks. There's no doubt in my mind we got a massive green candle right here at this point of control. All right? So, tell those people to shut up. Just kidding. But tell it to them nicely, of course. So this is going to be what I'm looking at as far as VPVR goes. I'm hoping we have reached our low here. Another thing that we can look at is from an RSI standpoint. You know, this is where I tweeted out, basically the RSI was as oversold at the height of COVID fear. AMC just had its best Q1 in over 2 years. What I really liked about the earnings report from Q1 is where Adam Aron was talking about how AMC is not just doing better than it was during the pandemic. Of course it's doing better than the pandemic. But he was saying he's starting to see better numbers than pre-pandemic levels. People were starting to spend more money on food and concessions and everything along those lines. Those kinds of, or that kind of news, if you will, is going to be what we want to hear. We don't want, AMC just to be recovering from COVID. We want AMC to be doing better than COVID. And obviously, we're going to see people who have been wanting to get out. I think that's what you're seeing. The problem with Netflix is, plus their, Netflix woke agenda with everything. But we want to see AMC not just, get to pre-COVID levels. We want to see AMC start doing better than pre-COVID levels. We want to see growth in our company. And that's what I really like to hear. Another thing on this fib, guys, you can also see why that 618 was also major resistance before the pre-June run. So this is all looking good as far as I'm concerned. Now, let's talk about what I see as far as price targets. So if we see a run, I've always based it off of fib extensions. When AMC ran in January, it basically, in pre-market, it actually went above it a little bit, but it hit that 3.618 fib extension, okay? So that was going to be once COVID happened, and then we had the squeeze once coming out of COVID. So if you take the exact same thing, if you take it from your pre-January low to your January high, to the buy button collapse, literally hits the 3.618 right on the tick, okay? Now, like I already said, Elliott wave theory is a little invalidated right here, but what does that do to our upside price targets if we see another run? So let's find out. I don't know, I hadn't done this yet. So we go from our low, from the buy button collapse to the June high, and assuming we have found our new low, then the 3.618 is $251.84. If you've been following me for any amount of time, 250 to 255 has always been my next upside target on a run. And once again, I'm basing that purely off of historically what has happened 2 times in the past. Okay. Now, anything's possible if FOMO shows up or anything like that, but to me, the most realistic scenarios is what has happened 2 times in the past. And what's happened 2 times in the past is the 3.618 has been hit on those, massive gamma runs, and then it starts a new cycle. So that's going to be what I'm looking for still as an upside target, right around that 250 range if we get a nice little run going. Now, notice I just said cycle stuff. So let's take a look at my cycle chart. So this is going to be the chart that I originally posted on March the 26th. And when everybody was getting super excited and I said, we got to be careful that we don't come up here to about the $34 range and then tumble all the way back down. Go back and check my Twitter feed and YouTube channel and everything like that if you need receipts or think I'm BSing or anything along those lines. I 100% said that if we don't hit massive volume at about the $34 range, this was going to happen. And now, full disclosure, so that's where I was right. Here's where I was wrong. I was wrong in thinking I thought our lows were already going to be hit. I didn't think we were going to come down this low. And the main reason why is that I think we came down this low is going to be kind of just what's been going on in the overall market as a whole. Obviously, nothing's been good. Inflation is completely whack and out of control. We got the war with Russia. Biden's in the White House with full-on dementia, not knowing anything that he's talking about. Things are just not good right now. So I think that's what assisted in kind of making the low a little bit lower. So I've been watching this. I was starting to get a little discouraged, once we kind of. So sorry, getting a little scatterbrained here. Let me bring it back in for you. So every single one of these boxes that I have is the same fractal. It's the same pattern. Okay. The biggest discrepancy when I've ever talked about cycles is I've always said nothing's going to be an exact, one for one or anything along those lines. While it's going to track similar patterns and shapes and everything like that, you can see that is what has gone on right here. But nothing's going to be an exact, candle for candle or anything like that. So my biggest concern was the orange box. And the orange box, the shape was the same, the pattern was the same, the fractal was the same, if you will. But you can see that this one only came back down to about halfway into the green box, and then the spring and before of April is going to be what made our lower low. However, over here, we had the same spring, the push up, but then when it came out, rather than stopping right here at this kind of 1450 level, then it made a much lower low than what we had over here. But then, same thing, we saw the push up, leveled off for just a little bit, then the real big push up, that's where we had our halt. Sorry, let me get these a little bit more stretched out here. And then we had the massive tumble out of here. So what I was looking for when it came to this is right here. So right here, you can see at earnings, we made a little bit of a lower low. So before it was like $9, and it came down here and it was like $8.90 or so, give or take. So that is what I was hoping for when it came to earnings over here. Once again, lined up with earnings. Now, everything about these moves are much bigger. This bottom was $8 up to $12. So that's a $4 move, okay? This was $12 up to $34. So once again, put things into perspective. Nothing's one for one. This move right here was a 46% move, where this move over here was a 160% move. So everything is starting to happen on a much bigger and grander scale. So you got to take that into account right here. So what I was hoping for is, right here, our 1290 low, I was hoping it was going to be somewhere right around here in the $11.50 range. That was just kind of where I was looking, mapping based off of fibs and everything like that. That's what I was hoping for. And instead, we got all the way down here to what? It was like $9.70, okay? But now, here's the cool part. So let's start getting a little bit closer in here. So once it actually made its lowest low, so what I really want you to look at is going to be how the volume started to react and how the EMA started to react. So once again, both these charts are going to be on the 30-minute chart, okay? So we made its lowest low, then after earnings, we had a big volume bar start to show up. Excuse me, not a big volume bar, but we saw increasing volume start to come into AMC. So what happened here? We had our earnings over here on May 9th, and then we made our lower low. Then we're starting to see some bigger volume reactions at this point in time. And this one right here was actually a little bit bigger. It's a little bit bigger. The next one, a little bit smaller. A little bit smaller. So obviously what I'm looking at here is I'm looking at the correlation with the EMAs, so the estimated moving averages, and you can see that the 20, so the red one, came down here and then started to push back up, and then it crossed over to the 50, and everything went to the races at that point in time. Okay, now not right away, because it had to move up. So it had to move up. So it had an upwards accumulation. Then it had to give you your new SOS. Then we had the pullback. Then we had the markup. All right. So it's not just, once again, this is not me saying squeeze this week or anything along those lines. But what I am going to be tracking is that I want to start seeing, some of this upwards accumulation that we had going on. All right. So get back down here. So this is what I'm going to be looking for. Really going to be looking at this 20, starting to hopefully cross over the 50, then over the 100, pushing up towards the 200. Now, if you'll notice, the big thing that's going on too is time. This one is taking a lot longer. So that's why I've repeatedly said on Twitter, to me, somewhere between the next 2 to 4 weeks is when we really need to see, positive, growth and momentum and everything like that out of AMC. Otherwise, I'm going to start being, really concerned. And once again, this accumulation doesn't have to happen the exact same way. But if you look at what's going on, man, like it really looks similar. Like, so we had the dump off, we're starting to curl. These EMAs are acting as support right here. So I'm hoping, once again, based off of what I'm looking at right here, I'm hoping right now that we are in, this area right here. And hopefully this 20 is about to cross over this 50 and start pushing up. So this is the area of the cycle that I'm hoping that we're in. Once again, it's not going to be one for one. You can clearly see right here, none of this is one for one, but it's this is the algorithm working as far as I'm concerned. So here's the cool part. All right. So if we go back to the regular chart, let's zoom in and let's take a look. So once it made that low after earnings, once it finally decided to push up, what did it do right here? Here, I'm going to go, let's go to the 1 hour. Well, would you look at that? It's got some gaps that have never been filled. Okay? So, this is going to be on the 4 hour. Yeah, just want to make sure it didn't scoot me over or anything. So look, once it made its lower low, then it started to push up and it left a gap right here from 951 to 957. There's a gap right here. And this could be considered a breakaway gap because look, there's no massive increasing volume until we got to the big kahuna candle right here. Okay? So, let's go back over here. Look, we've got the same similar formations going on. Now, basically the way I'm looking at my cycle chart is the way I feel like it's tracking is it's usually tracking anywhere between about 2 to 4 days. Okay? So, meaning one day back in, what would that have been? Kind of the April, let's see, when did we really start busting away? Sorry guys, it's late. Had a few beers on the golf course today. You know the deal. So yeah, May 10th, once it started breaking away, right now I'm tracking, I feel like it's about 1 day to every 3 to 4 days is what's happening now. So from May 10th, to June 2nd, yeah, that means we still got some time left, okay? But what I definitely want to see is that this chart keeps pretty much tracking the same way. That's what I'm going to be watching more than anything. And you can see the volume is starting to become more responsive. So once we do, so where did it really break through? So once we do kind of get, this was kind of our marker that was left over here right about 10.56 or $10.56 before it pulled back. So what would be the equivalent of that marker now? So the equivalent of that marker now is essentially going to be right here in this, let's call it $22 range, all the way up to 22.35. Once we break out of that right there, then this is the volume that we're going to want to see. So we're going to want to see big time volume coming in once we get back to the $22 range. So in a perfect world, this week we're going to just see continued upside movement. I know there's people calling for much bigger moves than I am, and I hope you're right. It won't bother me at all. But I think we could see. Well, let's see here. Oh, let's look at that real quick. So this first spike kind of came up here, right here to this bear flag. So this first spike, look at that. And that first spike came up to about that bear flag. So yeah, I mean this is looking pretty good. I would say sorry guys, I'm just kind of looking at this for the first time here with you. So I would say if we could, what's Friday this week? Is it the 20th? Yeah, the 20th. So I know this isn't going to make anybody, too super excited, but if we could get this week up to about, $14.50 to $15 range, then I would say things are still looking, really good and on track. Now, just like we made a much lower low here, could we make a much higher high this week than what I'm anticipating? Yes. If you follow me at all, volume is king. If we get insane volume, anything is possible. Okay, I'm just kind of looking for general similar moves to be occurring right in here. So that 786 right there, I think that would be a great target to get to this week. If we could get back up here to 786, kind of trade sideways, heading into next week or anything along those lines, I think that is going to be great. So, I mean, as far as I'm concerned, the cycle chart came down. Like I said, it came down basically about $1 lower than what I was hoping for, or $1.50 lower than what I was hoping for, but it is still showing a lot of signs of life. Things look good. We're getting some gaps in similar spots. We're getting some EMA crosses in similar spots. We're getting volume in similar spots. So, like I said, just a lot to look forward to. But at the end of the day, just patience, patience, patience. Don't go out there and buy a bunch of YOLOs or anything like that. Setups are great. Follow-throughs are what's important. So let's just kind of see how this all starts to play out. And then, if I've said it once, I've said it a million times. The overall market is going to matter greatly with what happens with AMC. So overall market, volume, watching the option chain. Love to see the cost to borrow start to increase on AMC. Those are going to be, it kind of needs to be a powder keg, kind of needs to build up to really see the moves that we want to see. And obviously, as this takes time to unfold, that news can come out, all that good stuff. So that's what I'm going to be looking for this week. I think it would be a great solid week if we can start making it back up here in the kind of that $14.50 to $15 range. So hope you guys had a wonderful weekend. Let's have a great week. Once again, don't go out there attacking people. I'm never going to try to attack people, but leave me alone. All right. So whatever. I don't care. Troll me. I'll just block you. It doesn't matter. Y'all have a great week. I'll see you out there.